As of December 2024, the U.S. Bureau of Labor Statistics stated that year over year, inflation in the United States has been 5.2%. But what's interesting is real estate has actually outpaced that. Have you ever wondered why investors hold onto their real estate during uncertain economic times? In this video, I'll walk you through recent data and proven strategies to show why holding real estate through inflationary times is a winning approach. I'll help explain inflation and its direct impact on real estate, how extended holding time builds equity and leverages rising rents. We'll go over case studies and data from leading institutions all the way through 2025. We'll also go over advanced strategies like diversification, technology integration, and risk management. We'll also go over the latest government policies, smart technologies, and emerging market trends, all supported by the latest data. What is inflation? Investopedia defines it as inflation is the rate at which general level of prices for goods and services increases, eroding purchasing power. Like we said before, that purchasing power is being decreased 5.2% year over year. As we've seen in the news, since 2015, getting more aggressive into 2021, inflation levels have changed from moderate to recent spikes, challenging many different types of investments. When inflation occurs, real estate behaves in a very predictable way. It's because it's a tangible asset. That means it's something that you can touch. Now, unlike tangible things like couches and cars, real estate includes land, it includes dirt, and the location of that dirt cannot be replaced. Because of that, over time, the value increases. Between 2015 and 2025, real estate values have appreciated between 20 and 30%. And never in American history has a person owned a property for 10 years, no matter which market we're talking about, and not made money when the time that they sold. And because of that rising value over time, especially in inflationary periods, that's why you'll see sources like Bloomberg and CNBC talk about how real estate is a hedging tool that can be used to overcome inflation. Now, not all markets behave the same way. This really pertains to the US market. There are some markets where real estate values do go down, like the rural areas of Japan. Due to their population change and people moving into the city, rural properties have been decreasing in value. But the real estate in cities like Tokyo, those are behaving in the same exact way. But the US overall is entirely different. The rural areas, the city areas, they are all increasing in value over periods of time. When we look at real estate, we really look at 10-year increments. What's nice about looking at it that way is it passes through the ebbs and flows of market. Of course, nothing goes up in a perfectly straight line, and there's adjustments that happen along the way. But real estate's not designed to be a short-term tool. And real estate should be really looked at on 10-year increments. We said holding time earlier on, but what does that mean? It simply means how long you own your real estate. The longer you own it, the more it rides out little storms that happen along the way, the changes that happen in overall markets. Like any market, real estate has its own market and behaves in different ways. But the longer you own that real estate, the more it smooths out the ups and downs that can happen month over month. And in general, the longer a piece of real estate is held, the better the overall returns of that investment. The San Francisco branch of the Federal Reserve did a study that showed owning a property for 10 to 15 years will actually outperform the returns of a real estate flip. Even during periods of interest rate increase doesn't always mean real estate value goes down. During the rise of the interest rates during the post-COVID markets, real estate still went up, a lot because of its limited supply for the US markets. Overall, 3 to 5% higher than COVID prices. Now, as an investor, it gets even better. And by investor, I mean owning rental properties. Rental rates have increased 6 to 9% between 2020 and 2024. So as a landlord, you can take advantage of those rent increases by increasing your own rents on your property. Again, taking advantage of inflationary behavior. Next becomes the added effects of tax benefits when owning real estate. Let's jump into investment real estate first. Now, talk with your tax person. Everybody's situation is different, but there's general guidelines. First is called depreciation. The government allows you to write off a portion of the real estate that you purchased year over year. Currently, it's 27 and a half years. So simply put, take the purchase price of the property, divide it by 27.5, and that's an annual write-off that can be used when you have investment property, adding on top of the increased values and increased rental rates, which can improve your overall return. Next, as of the time of this video, you can write off interest on the property. So if you get a mortgage when purchasing real estate, you also get to write off that interest. That gives an added effect to the returns on your investment in real estate. Now, if you're going to own the property, own or occupy it, depreciation doesn't apply, but the interest of the mortgage still does. Going back to the improved effects of long-term holding versus short-term holding, the longer you own the property, the better the returns. The Journal of Real Estate Research showed that owning a property more than 10 years yielded a 20 to 30% better return than owning a property for 5 years. Now let's talk about diversifying. There's different ways to diversify in real estate. You could do different classes of real estate, maybe multi-unit, single family, maybe even commercial, because each market can behave in very different ways. What I've recommended, invest in what you understand. So if you understand single families very well, but multi-units feel uncomfortable, focus your time on single families. If you know the commercial market, but residential doesn't make sense, focus on commercial. If diversifying makes sense, then learn before you invest. Study those markets and make sure it's something you're willing to invest in. Location can be a way to diversify. Do you invest all in one city or invest in different types of city? Secondary markets are some of the biggest returns in the nation right now, and Reno Sparks is considered a secondary market. Primary markets would be more like Las Vegas. So where to begin when investing in real estate? One of the fastest things is if you're renting, just pivot to ownership. Once you do, you're able to write off that interest, and now you're paying into something that appreciates over time. Try to hold your property over 5 years because the returns are so much better once you get into the 10 years plus. If it's not a fit for you, keep it, put a renter in it, or take that equity and move it to another piece of real estate. But don't take the equity and put it in something that's going to depreciate, like buying a car or something like that. But moving equity will have the same effects. So upsizing, downsizing can be the same outcome. Next, take it to the next step of investing. Start buying rental properties. Take advantage of depreciation and writing off the interest on mortgages. Take advantage of the rental markets and how they are going up, so you as a landlord can change those rents as well. Make sure you develop a long-term strategy. This analysis is not for real estate flippers. This is for purchasing real estate, holding it for a long time, and take advantage of the long-term changes of the market. Do lots and lots of research. Don't invest in what you don't understand. If single families feel comfortable, start there. Become a landlord of single family homes. Then learn, then consider multifamilies. Learn some more, consider commercial. Also learn geographic areas, study other markets, other towns, learn their economies, and see is it something that you'd want to invest in housing for that community or business rentals for that community. Attend webinars. There's so many people out there willing to share, willing to give, and you can learn perspective of their struggles, of their wins, and what they would do had they had the chance to do it all over again. If inflation's a concern, real estate's a great tool to help hedge that. If you found this helpful, please like and subscribe. We'll post more videos just like this.